Hey, what's up, guys? Good morning and happy Monday. Hey, what's up, Terry? What's up, Cheryl, Art, Russ, Lorna? Yeah, thanks, Cheryl. I'm like 90%. I'm a little bit stuffy, but just kind of feels like allergies. So I think the worst of COVID is behind me, and I wouldn't mind if I never got it again. But all right, guys, we'll jump in here. As always, hope you had a fantastic weekend. So, members of the Mastery, we got the overnight call credit spread here on the ES. A lot of just kind of a steady grind higher and a little bit chop here. So a good example of, we're short right now. We haven't really caught a big flush. Things are pretty, put it this way, it's a bit more forgiving than just buying puts. So last night, how we bought some puts that expired today, depending on strike selection, they could be down 20, 30, 40, 50%. I've got about $5,000 here of max loss. We're down 135. So they are a little bit forgiving. And we got the short calls up here at 43.95. All the way up yonder. So visually it feels like a safe trade. Got about $15 a cushion. The thing I'm going to watch here for this trade, initially at least, to be the 5-minute squeeze. Now, ultimately, the only thing we need is for the futures to just stay under 43.95. We're going to get profits a little bit quicker if we can actually catch a flush. So what I would like to see, if the market wants to take it into consideration, would be the 5-minute squeeze breaking short. And you can see we're getting some decent support here at the 5-minute 200, which, to be expected. 5-minute squeeze break short. We take out the lows. I think pretty quickly we should get filled for 60, 70% of max profit. 5-minute squeeze instead, slingshots higher. We'll keep an eye on her. But everything pretty smooth for now. One thing I did want to note, though, for those of you that did the future session last night, come on now. We still haven't gotten that purple bar here on the 15. So for this trade up to this point, we could have avoided all that chop had we opted to wait for that 15-minute signal. So we'll see how that goes. But as far as we'll jump over here to the weekly charts. So for my day trading, for my $1,000 a day goal, I'm just doing the S&P futures. For swing trading, I'm at the point where I'm going to focus on these names, and that's really it. So Netflix, Meta, Tesla, Google, Microsoft, NVIDIA, AMD, Amazon, QQQ, Apple, and the S&Ps. So weekly chart here of the Qs. Now here's the key, guys. It all comes down to how does the market handle the next dip. That could be a dip to a 30-minute 21. That could be a dip to an hourly 21. Could be a pullback to a daily 21. The key is how does the market handle that dip? The structure holds up. The buy signals hold up. If everything stays pretty steady after the dip, then I think the weekly squeeze here for the Qs and your big tech names gets really interesting. So let's do this. All right, so here's what we got. A lot of back and forth. A little bit of up, a little bit of down. The bears finally get some progress. They break it lower, they break it lower. So now we're at the point where they're printing the weekly squeeze. They got momentum to break under the zero line. They try to break the structure. 2 weekly closes under that 21 EMA. So in plain English, they try to get that weekly squeeze to the point where it's pretty much about to fire short. And then in one big candle, the bulls pretty much come through and take away all that progress. Right? They're pulling it lower. They're pulling it lower. You're getting a few chinks in the armor as far as the structure. You're getting the breaking momentum. Right? Getting that squeeze to the point where we're about to break short, and then boom. So that kind of gives it the quote-unquote slingshot effect. All right, they're pulling it back, they're pulling it back, they're pulling it back, and then snap right back to the upside. From there, that slingshot kind of action can take you back towards those previous highs. So the key level here, and again, it comes down to how does the market handle a dip. Key level on my end is going to be the weekly 21. All right, call it 358, 360. Just so happens to line up with the daily 21 EMA. The intersection of the 21s. So I'm looking for one of two things. One, finally get a bit of a dip, and it all kind of unfolds like it did back here. All right, here comes the bulls. We're making progress. We're back above the 21. We're back above the 50. First gust of wind knocks the house over. Same thing back here. We're pushing. We're pushing. Here comes the bulls. First pullback, and they crap the bed. So what I'm looking for is on this pullback, is it the same thing? All of the lower time frame buy signals disappear. The hourly structure breaks. The daily 21 EMA breaks. At that point, we're going right back down. If instead everything holds up, your first pullback to, say, the hourly 21, everything behaves a bit more like an uptrend, meaning the structure remains bullish, the momentum remains bullish. My thinking is I'm going to buy that dip, and then from there, try to see that weekly squeeze fire to the upside. And a good example here, I think why you want to wait for that dip, QQQ hasn't touched the hourly 21 since Halloween. So the Qs have gone, we'll call it $20 without even smooching the 21 EMA on the hourly. Doesn't mean we can't go higher from here. Just usually means before we can, we got to get a little bit of a pullback. You could even look at it on the 30. Point I'm trying to make is bigger picture. That weekly squeeze is getting really interesting. In the shorter term, we're a little bit cooked. You haven't touched the 30-minute 21 in quite a while. I'm not even sure if we've smooched the 15-minute 21. And typical of a short squeeze, right? Shorts get trapped. We're pushing. They continue to cover. It's a big spastic push. Does the structure hold on the dip? So that is the name of the game as far as swing trades. So call it 358, call it 360. I'm looking for a flush. I'm going to wait for the dust to settle. And after the dust settles, if my 15-minute chart's got a buy signal, my 30-minute chart's got a buy signal, my hourly chart's got a buy signal, I am jumping on in. So here's what I would look to trade. You could get long the QQQ, which, in a lot of ways kind of covers a lot of ground for you. But as far as the stocks go, a few of them here are perfect on the weekly. Well, first up is Amazon. And Amazon gets a perfect 10 out of 10. All right, big three score, 10 out of 10. It's an A+ setup, meaning you got the squeeze, you've got the buy signal, and you got a good entry. Right, everything looks like it wants to go higher here. 21 EMA held. Got a brand new buy signal. You're back above the weekly 200. So long as that weekly squeeze, so long as that signal prints, we should be looking for 150, 155. You've got Meta. You might not have Meta, but you probably heard of her. Beautiful weekly chart. Like really, really solid. First leg to the upside. First pullback to the rising weekly 21. Structure holds perfectly. The buy signal holds. Brand new squeeze. So as long as that signal prints, and that signal should print as long as the QQQ is above that 360. As long as that weekly buy signal prints, looking for 345, 350. All right, you've got the likes of Microsoft. Not quite a perfect 10 just yet, but we're pretty much like right on the cusp. And it might happen at the open, but if they can get weekly momentum back above the zero line, at that point, we'll get a weekly buy signal. At that point, she a 10 out of 10, and you're looking for a breakout above the highs here. If that's a 5-minute squeeze, I've got to look at it the same way. You had a 5-minute squeeze back here, had a nice push to the upside. You get in your first pullback to the 5-minute 21. Structure remained perfect. Now, if the bulls can refill the gas tank, I got to think that goes on to take out the highs. Even better and an even higher probability if the QQQ can lead the way. So what I'm really trying to trade is a weekly squeeze in the QQQ. I can trade that via Microsoft, right? I can trade that via Amazon. I can trade that via Meta. None of those ideas work if the QQQ is back under 360. But if going into December, into January, February, March, this weekly squeeze does slingshot to the upside, and we're through 390, we're cruising towards 400, then there's a really, really strong chance Amazon hits that 150. Meta's going to hit its target, Microsoft, and then a few more for you. Google also pretty close to a brand new weekly buy signal. We are waiting on just a little bit more structure, but that begins to shape up, and then admittedly not as clean as Amazon, not as clean as Meta. Tesla, though, this one's a bit more risk reward, right? Amazon's a perfect 10 out of 10. Tesla's a -1. So as far as quality of the setup, it's nowhere near an Amazon or a Meta. What I do like about it as far as risk reward, it does feel like a little bit of a trap has been set. And, what I'm seeing right now, guys, in a lot of weekly charts is just that, that slingshot kind of setup. Got a big weekly squeeze. All right, so we're in compression. And then what happens in compression? Momentum breaks lower. The structure begins to break. Price goes lower. Taking out the 21, taking out the 50. At one point, they take out the weekly 200. They take that weekly squeeze like right to the very verge of firing short. Like we're like an inch and a half away from firing short. And then bang. Right back above the weekly 50, right back above that weekly 200. So chapter 5, page 10 of How to Trade says get short on a break of the weekly 200 SMA. Right. Anybody taking that chapter 5, page 20 trade, by the end of the week, they're already in trouble. Rope them in, try to squeeze them out. So in terms of risk reward, I think, even some March expiration 300 calls with a stop below the weekly 200, if you're wrong, take it off here. If the squeeze does slingshot and you're right, that could be a huge trade. Now, the odds of that trade working are a lot better if the QQQ can get the job done. But though my focus is the tech names, the compass here, so to say, is going to be the QQQ. If Microsoft pulls back and QQQ pulls back, I'm looking for that fresh buy signal on the QQQ first. Qs hold 360. Lower time frames keep the buy signals. Structure holds up. I'm looking for a path back towards these highs. If we're back under that weekly 21, I got to can that idea. And then I'll show you a couple more weekly charts here, and then if got any questions, anything you want to look at, let me know. But as far as Big Mama, the S&Ps, come on, don't be shy. Same, just a really impressive weekly reversal candle. Now, technically, the squeeze did break short. I would look at it from the same kind of slingshot perspective. Momentum breaks. They break the 21. They break the 50. Like, things are about to get uglier. And then really in one candle, they take away 2 or 3 weeks of progress that the bears made. Think the S&Ps hold above 4,300? They're trying to rebuild to take it higher. Now, the real kicker here, and the final chart, pretty good chance a big part of this continues to be the dollar. All right, so for the first time in a long time, at least on the daily chart, we're seeing the signs that dollar might be done. Done with the huge push higher, at least for now. So the first heads up was back here in early October when momentum broke. First, you lose momentum, then you lose your structure. Now you're finally losing structure. Takes out the 21, takes out the daily 50. Keep in mind, you're in a daily squeeze. So there's room for lower here. If that daily squeeze does break short, not the craziest thing to see this back down towards a daily 200. And I think you got a small sample size here the last few days. Dollar pulls back. Typically going to be a good thing for the equities. So keep that in the back pocket. But yeah, otherwise, guys, the major game plan for swing trades is wait for a pullback in the QQQ, wait for a pullback in the Amazons, Microsofts, the Metas. And don't be the first guy or girl to buy that pullback. Let them pull it back. Make sure the structure holds up. Make sure you got your buy signals. And then all the while, keep in mind the big weekly squeezes. But all right, any questions, any charts you want to look at, drop them in the chats here. And we got about 25 minutes before the opening bell. Hey, what's up, Andrew? Good morning, MP. Good morning, Tony. Claudia, buenos dias. All right, Joe wants to look at some Costco. Let me check the hourly. Yeah, it's got a nice hourly squeeze. And let me check the weekly. Man, these charts are slow. All right, nice weekly squeeze. Again, I think you focus on the indices first, right? They're always going to lead the way. But I think you throw that in the same bucket. So if the S&Ps can hold above the weekly 21, if the QQQ can hold above that 21, and then if Costco can hold above the weekly 21, pretty good chance to see each of them fire to the upside. The weekly chart grades out really well here. It's an A+ setup. It's a 10 out of 10. But if the next pullback sees the S&Ps and the Qs falling apart, just makes it tougher for Costco to get the job done. So S&P QQQ first. If they give you the thumbs up, yeah, Costco could get to 600 from the weekly squeeze. 2.5 average true range above the weekly 21 is 595. So I think you throw the bulls an extra 5 and call it 600. Market willing, though. Mama, market willing. Yeah, Peter, unfortunately, I think that's just a thinkorswim thing. I run into the same problem. Now, weirdly enough, if you do it early in the morning, sometimes it'll work. But then there does seem to be a point where you don't get any scan results until the cash market opens. They cut you off. Lester, Datadog, and Celsius. Looks like Datadog's got earnings. When's that? Okay, so earnings are tomorrow morning. So usually it's a little tough to try to read too much into it before earnings. Let's check the daily chart. It's not in good shape going into earnings. You've got a daily sell signal. You're under the 50, under the 21, under the 200. But the thing about earnings is tomorrow morning you could wake up and have a daily buy signal. So I would come back to that one tomorrow, and then Celsius. Same thing for Celsius. Earnings tomorrow morning. None of their daily charts are, particularly great, but again, could change in the AM. Mario's got some AMD. Speaking of earnings, AMD had a nice move. So I'm pretty sure we got a weekly squeeze here. Now, like a lot of things out there, it's a little bit cooked. Could go to 115, could go to 120. But as far as, is that a spot where I typically want to buy it? Not usually. Pull back to a 30-minute 21 and pull back to an hourly 21. At that point, it's a little bit easier to work with. Let's go see the weekly. Weekly chart says somebody call Chuck Schwab. These charts are way too slow. Another example of that potential slingshot. They print the squeeze, so we're compressing. Momentum goes lower. They try taking price lower. They try breaking structure. They get the weekly squeeze to a point where there's a better chance it breaks short. But they never get the job done. All right, and then in one big candle, they do clean up a lot of that mess. So now for AMD here, looking at 105-ish. Bigger picture, if that next pullback holds above that weekly 21, and you've got your 4-hour buy signals, your hourly buy signal, from there, I think you try to see that squeeze go back to the upside. Again, if the QQQ craps the bed, AMD's probably going to go with it. But if December, January, February does see the QQQ back towards 390-ish, these Amazons, these Metas, everything should follow suit. So mind you, the last time we had this combination, QQQ weekly squeeze, Amazon, Microsoft, right, all those leading names in a big squeeze. And keep in mind, for a lot of these, the QQQ included, there's multiple squeezes. We've got monthlies, we've got weeklies, we've got 3 days, we've got 2 days. We got all the days. But the last time you had that was April, May. Off goes the market, off goes the stocks. tends to make for some of your best swing trading. In my experience, it makes for the best swing trading. A lot of wind at yo back. So I would throw AMD into the same bucket. QQQ, Meta, Microsoft, Amazon, even Netflix. So I don't know if these fire long. What I do know is that in the past, when they do, that's always where I've made the most money swing trading. All right, so here's Netflix. We had some great trades back here. Some of my bigger trades this year came from that weekly squeeze. Again, wasn't just a Netflix thing, it was the whole market. You had Apple, you had QQQ, you had the S&Ps, everything just weekly squeezing. So a little bit of that slingshot, right? Squeeze prints, momentum breaks under 0. They're taking it under the 21. They're taking it under the 50. Very close to seeing that squeeze break short. And then right back up we go. We're back above the 50. We're back above the 21. We're back above that 200. Only thing missing here is a fresh gas tank. Bulls cross momentum back above 0. Doesn't matter what time frame it is. Monthly, weekly, 5-minute, 30-minute. Right? That pattern of print to squeeze. Try to break it short. Fail to break it short. And then all of the signals reload. Typically a nice recipe for a pushback towards the highs. How does it handle a pullback? And now all of a sudden, the daily chart on Netflix, you've got a brand new daily buy signal. Right? A bit more of an indication if we do pull back, things should hold up. What I'm trying to preach is we've seen this before. Oh boy, here comes Netflix. Structure is getting better. Oh man, we got a buy signal, first pullback. A little bit of bed crapping. What happens this time around? We pull back, everything holds up firm. All right, I'm going to buy some calls now, trying to play for that weekly squeeze. I'll show you NVIDIA, but they're all over the place. If you build it, they will come. Big dog NVIDIA, no exception. Momentum breaks, the structure breaks. They don't quite get it to fire short. North of 420. They're rebuilding the 30-minute. They're rebuilding the hourly. They're going to rebuild the 4-hour. They're going to rebuild the daily. They're going to rebuild everything inside this weekly squeeze, which eventually should see it fire to the upside. Under that weekly 21, they can't do that rebuild. So weekly 21's really, really important. All right, guys, let me keep rifling through here. Peter's got some General Electric. It is another weekly squeeze. I'm telling you, they're all over. Let's check out the daily here. For now, the daily squeeze is setting up to fire short. You're under the 50, you're under the 21, momentum's under the 0 line, you've got a sell signal. So this hasn't made the progress we've seen in the S&Ps, the QQQ, the tech stocks. Doesn't mean I'm going to short it, but to me it would mean if I'm going to get long, focus would have to be with an Amazon or a Microsoft. Something that grades out a little better than a -6. If I was thinking get short, that's a bit more in line with that for now. All right, come on down, futures. The water's warm. How we doing here? Whole lot of nothing so far. All right, checked out GE, checked out AMD. Okay, Andrew, that makes sense. Volume thing. All right. That does make sense. So, Bruce, great question. When I'm talking about buying a pullback, am I referring to the daily 21 EMA? Good question. The thinking for me is I'm willing to buy it all the way down to that daily 21. Doesn't mean that I have to wait until we're down there. Also, it doesn't mean I'm actually going to get that full reversion to the daily 21. But what I love about that daily 21 is just more so context. In the grand scheme of things, I'm calling 358 where I'm wrong. So I can buy it at 365. I can buy it at 360. I can buy it all the way down to 358. So now thinking in terms of risk reward, what's my best possible entry? I'm trying to play it higher into 390, and I'm going to call it wrong under 358. So risk reward wise, my best entry is buying calls or selling puts. It's getting long at 358. If I can get long directly on top of that 21 EMA, I'm going to take a paper cut loss if it keeps going lower. So from there, it's just it's an aggressiveness thing. If I'm game to put on a 10% position size down here, I'm probably not going to do that up here. Up here, I might risk 1 or 2%. We get a little bit closer. Maybe I'm taking a 5% position. So it's kind of process of elimination all the way down to that daily 21. We pull back to a 30-minute 21. Everything holds up really good. All right, we got buy signals. We got good structure. First pullback to the 30-minute 21 might be the entry. But I got to know I'm not wrong until I'm down here. So I'm probably not putting on a max size. All right, maybe we're pulling back to, say, the hourly 21. Now, I'm not going to put on my max size at the hourly 21. At that point, I'm still $4 above where I'm wrong, but I'm a lot closer. So that aggressiveness scale as far as the actual risk, different from trader to trader. But for sake of conversation, for me, it'd look maybe something like this. Down here, I can risk 10% of my account. Maybe up here, I'm going to risk 2.5 to 5. And if I'm buying it up here at a 30-minute 21, maybe I'm risking 1 to 2%. Want to save my biggest risk, save my biggest size. For my entries as close to that line in the sand as possible. I put on 10% of my account into some QQQ calls at 359, and I take the trade-off under 358, I might lose 1 to 2% of my account. From there, if I catch a push towards 390, I might make 10, 15, 20% on my account. That gets a little bit skewed if I'm getting heavy up here. So hopefully that makes sense. Willing to buy it all the way down to the daily 21. Along the way can scale in, things like that. Just, we never want to be the guy or the gal that wakes up, caught with your pants down, so to say. Meaning you got heavily long, a little too far above that daily 21. And then the brutal thing about it, especially in a bit more of a bullish market, we're getting our butt handed to us on that pullback. And it's the very pullback we should be buying into. So you rob yourself in a couple different ways there. Yeah, so Ju Sung, good question. So entry point for the Qs would be all the way down to 360. First thing I'll watch is the 30-minute 21 EMA. And that might be where the market finds support. All right, we're getting fresh buy signals. That might be the entry. Maybe we pull back to a 30-minute 21 and that level breaks. All right, now I'm going to shift over to the hourly 21. Kind of process of elimination, all the way down to the daily 21. So if Netflix is a name I want to buy, and it might be, it just might be, I'm going to look at Netflix heading into today and say, all right, my line in the sand is all the way down here, 400. Meaning if I buy calls today, I might have to take 30 bucks on the chin. And down here at 400, it might still be a good setup. It's probably still going to have a daily buy signal. More importantly, if we get a pullback to 400, I should be sitting there drooling over the idea of buying it down there. I can risk a few bucks to catch 30, 40, 50, 60. So yeah, I can buy it up here, but not with a big size, not with a big risk. Mentally, if I bought it up here, in the back of my mind, I'm kind of hoping that trade goes against me. Like, I can put on 1% of my account. And if Netflix explodes, maybe I catch a double. All right, cool. I'm up 1%. Nothing wrong with that, but I know in the back of my mind, if I'm taking the entry down here, now I'm working an entry where I could grow my account by 5, 10+% if the trade works. So I really do think you want to save the, try to save most of your powder for those entries near that daily 21. Andrew, feeling a little better, man. Feeling a little better today. So JK, I've only got 2 screens. I've got the one to my left that you all see right here. And then I've got one to the right that has the chat room, the options room, my mastery. And then I'll throw the options chain on that chart throughout the day. But 99% of the time, I'm watching just this screen right here in front of y'all. But all right, listen, guys, cash markets open up in 7 minutes. I got a futures trade to keep an eye on here, so I'll let you go. But as always, thank you for all your time this morning. Hope you had a great weekend. Hope you found it helpful. And I'll see you here again, same time, same channel on Wednesday morning. Alrighty, so trade well, be disciplined, stay healthy, and I'll talk to you all soon. Adios.